Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Paris milling wheat. There had been here in the past one dominant pattern over all this market that 22 weeks ago took a break on the downside. It is of course the late August 24 to late February 25 ascending triangle pattern. This pattern had the requisite combined 5+ touches and is made up from a lot of smaller patterns within it, but parts of the main pattern can still be seen on my daily chart. 23 weeks ago I laid out targets below for this pattern of a primary target down at 226 and a secondary harder to reach target down at 194. 21 weeks ago prices reached the primary target, but we kept shying away from that 200 level. Enough that I chose 7 weeks ago to retire the secondary target at 194. We're again this week approaching that 200 level. I'm wondering whether to reinstate that 194 target below. However, all the action in between the ascending triangle and today has left us with some other interesting patterns to look at. The first had been the renewed strength of the bright red realigned March 24 today uptrend, currently at 204.25. This has been tested a number of times since its establishment back in late May, including last week and this week and yesterday, and we had a proper close below it there for the first time with a further move lower today. I'm watching this development with great interest. Now, what is interesting is the purple middle time, currently at 204.25, of the mid-March to mid-May bearish shift pitch walk. You see, I said last week, and I quote, "This runs through the bright red uptrend late next week, and if there was ever a time when you could knock out two supports at the same time, then that would be it. So I advise caution ahead of a possible further testing on the downside," end of quote. I'd gone even further 4 weeks ago when I said, and I quote, "I'd watch this bearish shift pitch walk, especially the middle time, as we seem to be running out of time." You see, what I mean is that the middle time crosses down through the bright red uptrend in about 4 weeks. So that's this week. And I continued onwards at the end of July, and I suspect before then something will have to give. Add to this the pressure above from the mauve medium moving average, currently at 212.5, and to the static 50% absolute Fibonacci line, and it may be that we see a test down towards the July 2021 low at 197.25. Watch this space, end of quote. All this has come together this week, and I'll be very interested to see how next week pans out as a result of this. Minneapolis wheat. The sideways triangle over February to May had run this market lower in mid-May, but then we saw the impact of the slightly realigned September 2019 today uptrend. Originally way below the market, but now a lot closer, and it's currently at 575.5, as well as the congestion below at 578.75. Those together turned prices higher in mid-May, with the added impetus of a changeover gap higher at the same time. The market then rested for a bit, just over the mauve medium moving average and gold long moving averages, currently at 616 even and 613.75 respectively, creating a small bullish halfway hesitation that 8 weeks ago reached its target on the top side. We next had a dip, creating what in the future will be referred to as the first shoulder, before another rally in early June, reaching up to possibly the two most important features here, which is the November 2017 high at 655.75, and that's just under the 50% Fibonacci line of the May to August 24 move at 669.5. These two resistances were responsible for the highs back in February this year and October last year, and they helped realign the dark blue downtrend above, dating from July 23, and that's currently at 644.25. So we dropped from these resistances down once more, forming what will become the head, all the way to the combination once more of the mauve medium moving average and gold long moving average, bouncing up for a second time, but only to the dark blue downtrend and the 650 to 651 3/4 congestion, before being rejected again and falling down to form the second shoulder. Last week prices dropped below the combined mauve medium moving average and gold long moving average, finally establishing itself below these two supports that are now resistances. All this activity has formed a late May to mid-July head and shoulders pattern, as you can see on my daily chart, with the bright red neckline for this pattern currently at 603.5 being pierced at the start of this week, and the market now starting to stabilize below it. Now, I said last week, and it is a long quote, though it still has a number of valid points, and I really wish to reprise this quote. So I quote, "In most cases, this pattern would be a bearish reversal pattern, plus thus a head and shoulders top. However, we do also have head and shoulders continuation patterns, which is a rarer pattern, but one that still exists. And right now we haven't made a confirmed break of the neckline, so I cannot tell which it would be, but I can give an idea of the size of the move once it happens. Thus, for a break low, we'd have a primary move below the neckline of 23.5 cents with a secondary harder to achieve move of 50 cents. I would add a caveat to the full move lower to watch out where the September 2016 to date uptrend is at the time, as I think that might lead to a possible higher secondary target. For the break higher, we would have a primary move up and away from the neckline of 23.5 cents, with a secondary harder to achieve move of 50 cents. I would again add a caveat here to the full move higher to watch out where the July 23 to date downtrend is at the time, as I think that might lead to a possible lower secondary target." End of quote. End of the long quote. Looking today, I'm on the verge of formalizing those potential targets into real targets, but as this is a multi-month pattern, I'll say that again, this is a multi-month pattern, and just to be sure, I'll leave it for just one more week before I do so. Finally, I've spoken in recent weeks of a possible bow tie formation of the three moving averages made about 6 weeks ago. This is a scrappy bow tie formation with the mauve medium moving average and the gold long moving average not crossing over properly, though they came awfully close. I've kept an eye on that pattern idea, as we are now just outside that time period when we might expect volatility or a move to start. So if we only look at the past 3 weeks, let's say 3 weeks, past 3 weeks, we've seen a move lower, and I've wondered, and now on the verge of believing, this scrappy bow tie formation is one of the ones of the things that's partially responsible for that move. London UK feed week. There had been on this daily chart until recently, for about a year, a major significant pattern here, a pattern that we have not seen in the other grain markets. It's the bright red late May to early July 2024 bearish shift pitchfork. The market in late February this year reasserted the then dominance of this pattern, with prices breaching, then repairing an attempted break higher over the bright red upper time at the time, which is currently at 168.40. Add to this the important, even today, 50% absolute Fibonacci line at 180.5, and you had, and even now still have, an area overhead in the 180.5 area that is significant resistance. The next big feature is the twofold key reversals down we saw in June. The weekly key reversal down mid-June and the subsequent monthly key reversal down for the whole of June. These bearish patterns have been overtaken by an even bigger move, a bullish move higher that also broke the back of this bright red bearish shift pitchfork, whilst also pushing up over all the moving averages and, importantly, over the neckline, currently 168 even, of two very important long-term patterns which I will discuss shortly. The key change in early July, a gapping higher move, higher changeover move that saw prices challenging the 50% absolute Fibonacci line once more on the top side over the last 3 weeks, as well as coming closer to the purple July 23 to date downtrend, currently at 182.85. and the September 2021 low at 181.70. We have since this move up stabilized, but it was just under the 50% absolute Fibonacci line, and as I said last week, and I quote, "Seem to be getting ready for whatever will be the next move," end of quote. The first feature this move up created was an immediate countering monthly key reversal up, if only just for July. However, this action was over most of July, also created a rounded top pattern. When we are seeing the last parts of this creation this week, and anticipate a possible further move lower next week. This all leads me to my final 4 points, and the same 4 points I've been discussing for months now. The 3 of them were something that I noted back in my annual commentary back in January on London Feed Week. To see these, it's best if we switch to my longer term monthly patterns. Okay, so we're looking at my longer term monthly patterns for ICE UK feed wheat. Firstly, I saw back then the potential for a very large May 23 to date cat's ears pattern. This is a bearish pattern, akin to a double top, formed after a big fall, such as the fall we had earlier in 2023, as well as an even longer term second pattern, an August 2020 to date very large head and shoulders pattern, head and shoulders top pattern. These two super long-term patterns both rely on one single feature, and that is their common neckline, highlighted in dark blue on my daily chart and currently at 168 even. Thus, the primary target X3 for the bearish cat's ears pattern will be down in the 127.5 zone, just below the bright red and big old 2005 to date uptrend, currently at 131.55. A secondary harder to reach target X4 would be down in the 112.85 zone, around where the dark blue lower trend line is, currently at 113.90. For the old big one, 2007 to 2022 ascending expanding wedge pattern. For the head and shoulders top, we would have an even lower primary target X5 down in the 64.20 zone, close to where sits the oldest uptrend I have on any of my 200 or so charts, the 1975 to date, yes, half a century old uptrend, currently at 65.95. I'm not even going to give you my secondary harder to achieve target for this pattern, as this is actually below zero. So please bear in mind that these are very long-term patterns, stretching possibly many years, but they are still targets below for these patterns above. Now, that all being said, July with changeover through a major spanner in the works for such longer term patterns. The reactionary immediate countering monthly key reversal up for July went back above the purple neckline, but stopped at the breached early 2016 to date uptrend, currently at 179.05. The question, and it is a longer term question, is whether this is just a reactionary single month move higher or the beginning of something else. For now, I will stick to the reactionary single month move higher, but I am prepared to start looking at the possibility of a new support base, not only being built but also being exploited for a possible move higher. There is one caveat to this. We have also created since mid-2023 a big bear channel, currently 134.15 to 182.75. Even with such a big reactionary move back up, we are still sitting within this big bear channel, and it does have the advantage of having at least the 5 touches necessary to legitimize it. For all this, I still need more data, as we're dealing here with some very long-term patterns. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpick and ADM Investor Service International Limited. And here comes the final important bit.